I am so glad you're here today, Steve, because obviously it's a very eventful day. We're seeing volatility spike. We're seeing stocks sell off. In your view, what exactly is going on here? I mean, I know people have been calling for this for quite a while.
Well, I think what we saw through most of the month of January was this relentless bull market. And, you know, some people really were claiming that felt like a blow-off. But blow-offs are tough to figure out until hindsight. So, you know, maybe now that hindsight's 2020. The tell there, I think, was that the VIX was continuing to rise as the stock market was rising. And that definitely led to a little bit of an unusual circumstance. And I think we're sort of seeing the tail end of that now.
There's a chart on the Bloomberg where we look at the moving averages of the S&P 500 just to kind of put this in perspective. So we made that chart, and it shows the S&P still holding just above its 50-day moving averages. Although with the sell-off deepening today, it's getting closer to it. The bottom chart is the percentage of S&P members trading above their 50-day moving, 200-day moving averages. So how concerned should bulls be at this point?
I think the bullish consensus really hasn't been broken yet. We haven't even given back the year to date, and the year's only 5 weeks old.
We're still up about 3% on
exactly.
the year.
So really, people tend to be asymmetric in their response to sell-offs. You know, when the market goes up, well, that's what it's supposed to do. When the market goes down, let's run kicking and screaming and freak out a lot.
Right.
And a lot of that is because of positioning. I think people were starting to use a lot of leverage to put on their stock positions, and of course, you had people shorting volatility, which is a very unfamiliar place for many people to be, and that's leading to a lot of the discomfort.
Just quickly here then, if you turn to options, I know you're looking at a potential trade involving the VXX, which is the volatility of volatility.
Yes.
And so what are the opportunities that you see there?
Well, basically right now, I think we've actually seen a lot of the volatilities exhaust themselves in the time since we talked about it this morning till now. You know, the VIX and the VXX have spiked this afternoon.
Sure.
And the point of this was, before the spike, was to remind people that if you're crazy enough to be short the VXX, you better be aware that volatility, because VXX is really trading a second order version of the S&P, it's going to be far more volatile, and you're going to get whipsawed very quickly. So the trade was more or less to say, all right, here's how to, if you're crazy enough to be short this thing right now, here's a way to protect your upside by buying out of the money calls, which by now are probably at money. But since it's very expensive, you would be selling some puts and buying another one to protect.